Hey guys, how's it going? I'm going to be setting up this mentoring session for me, Karen, and Jeremiah real quick. Once I'm done setting this up, I'm sending them the link so that they can join in, and then you guys can sit in if you guys would like. Just a reminder, this session is for Karen and Jeremiah, so I'm not going to be answering any questions, but you guys are more than welcome to sit in and follow along if you guys want. So let me just get this set up right here. Who's the trade? Let's enter this right now. Get this set up on my thing real quick. Let's see, this is going to be stop loss 32 for 55. 32. Cool. That run. Yeah, let me finish setting this room up real quick, and then I should be good to go. One last thing. Perfect. Let me just get this link sent over to Karen real quick, and then I could get right in here. Let's see. Cool. So I think we're good for the most part. All right, cool. So I'm just waiting for her to show up real quick, her and Jeremiah, and then we're going to get started with our session here.
Hi, Shawn. Can you hear me?
Hey, Karen, I can hear you. How you doing?
Good.
Perfect. You can hear me all right, right?
I can.
All right, perfect.
Do you care if I do video or not?
Oh, no, it's fine. It's up to you. You don't need to if you don't want to. It's all good.
Okay.
Right.
I sent it to Jeremiah, so he should be jumping on now.
Perfect. That's exactly what I was going to ask you.
Yeah.
All right. So how's your day been going so far? Did you take any of these trades this morning?
You know what? I did, Shawn. I took the first one, and I ended up losing.
Oh, so you took the scalp, right?
I did.
Yeah, so you didn't take the daily entry?
No.
Oh man. I took I was hoping everyone took both. It seemed like a lot of people took one or the other, and some people won, some people lost. I mean, it's unfortunate, but you know what happens.
Yeah, I know. I done learned, and let me just tell you, I done have my ups and downs with this trade.
Oh no, definitely. Yeah, no, I've had a lot of ups and downs. I've been training for a long time. I'm sure you know. I've been training for like 10 years now. So I've had a lot of ups and a lot, like way more downs until I got to these ups. So don't give up. You're gonna get there.
Yeah. No, I don't want to. That's why I wanted to do the one-on-one, because it seemed like when I do get in, I had a issue of over leveraging, and I done blew a lot of accounts, and it's like I gotta, stop doing that.
Oh no, definitely. Yeah, risk management is got to be number one. That's going to be the main key because as long as you have a strategy that's over 50% of a win rate,
Mhm.
I mean, you can take every trade, and as long as you use proper risk, you should be able to survive these moves whenever.
Yeah, and I was doing proper risk management, and this morning I didn't, because I had took like 27 trades and won and had like 100%, and then the last 3 trades I end up doing a big lot size and end up losing all 3.
Oh no, that it always happens. It seems like they know when you're taking that big lot size, right? It seems like
Yeah,
you're doing good.
I know, it's right. It's like the market is against me, because it's like when I'm doing the small lot sizes, I'm good. And then when I'm like, okay, I want to do a bigger lot size, because I always see, oh, somebody made $1,000. I'm like, okay, I'm gonna do the bigger lot size, and
Hmm.
it gets me every time.
Yeah, I feel like that's the same problem with a lot of people too, even myself sometimes. Sometimes I'll over leverage or I'll take a bigger lot size than I know I should be taking. And, it never goes right. So what I recommend is, just stay consistent. It's hard to sometimes, but, as long as you can stay consistent and just rinse and repeat the same thing over and over again, you should be good. It's, you got to keep looking at it as a long-term game. I think that's the main key here. Cause a lot of people, they try to over leverage and then they end up, it just ends up not playing well when they take that one loss that ends up being not a good trade.
Hey, how you doing, Shawn?
Hey, Jeremiah, how's it going?
Hanging in there.
And I was just talking to your mom. Did you take the any trades this morning?
No, actually, only thing I took actually was the USD CHF.
Okay, nice. Yeah, so you're doing pretty all right then. It seems like I was telling your mom, like some people took one of the US 30 trades and didn't take the other, and one of them hit TP, like the big one actually hit TP, while the other one hit stop loss. So some people, they're on the opposite ends, but I think you made a good decision of sitting out the market this morning since there
Oh
was
yeah,
so much
I'm
news.
listening into what you say a lot.
Oh yeah, no, definitely. I didn't even follow my own rules myself. Like usually I don't trade during the news, but I just felt overly confident. It happens. Like we had such a great week last week and into this week, so I decided to take that trade, and unfortunately we took a loss on that. But it's all good because I use proper risk, so I'm able to bounce back from that. Not a big deal.
Oh yeah.
Definitely. So what do you guys want to cover today? It's your guys' session. So anything you guys have questions with, we can break it down, go over anything you guys need help with.
Basically, what our problem is understanding, how to read the charts.
Okay, perfect. So is it like more so like analyzing it from scratch, like from start to finish, or is it just like a certain thing that you need help with?
Basically analyzing it from scratch,
Okay.
really understanding the steps that we're actually taking.
Mm-hmm. Okay, perfect. So is there a specific asset that you like to trade? Because we could focus on one because they all kind of move a little different. So depending on what you like to trade, for indices, we'd use a smaller time frame to begin our top-down analysis, while for like Forex, we'll start on like the 4 hour. So depending on what you like to trade, we can drill on that. Unless you guys want to do both, we can do both too. But it's really up to you guys.
Both. I mean, we like to trade both.
We usually trade mostly US 30 because we stick with you, but I do want to learn how to look at the US 30 and another pair. And we can just learn your scalping. I really just want to get your scalping. I know you stay on your call. It's very easy, just follow these steps. But it's like me looking at this chart, trying to follow your steps. I'm like, and so that's
Exactly.
it.
Yeah, no, definitely. And I move kind of fast. So I could see that, sometimes people get lost and they don't know exactly what I'm doing, like step by step. So I'll try to break it down for you guys step by step, how I analyze charts. And we'll start from like a bigger chart, like a bigger time frame, and then we'll go down from there to scalping so that you guys can understand, how to analyze things from like a top-down analysis, which, you start from the higher time frame and then determine, what the bias is and like how things are moving. And then from there, we move on to a scalp. And then you could kind of have a bias as to where you want to trade, like if you want to take buys or sells. So let's start with US 30 then. So I'll pull up US 30 real quick over here. Let's see. Actually, go to a clean chart right here, US 30. So basically for the indices, you can start on the 4 hour if you really want to, but I feel like the 4 hour is like it's too big of a time frame where it's not really going to tell you much that you really need. if you're going to be scalping. So I actually start my analysis on the 1 hour for indices. So first of all, I'll go to the 1 hour right here, and I'll just give you my steps. So I'll, let's see, this is going to be the indices analysis checklist. So first, we're going to pull up the 1 hour time frame. So that's first things first. Second, we're going to identify market structure using the K2SR zones. Second, we're going to identify bias using, we'll do this, direction of price bias using K2 momentum indicator. And then from there, we'll, you can either lay out scenarios or move down lower time frame. So that's pretty much it. I mean, it's not really that difficult. I mean, it might seem difficult when I look over it because I do it pretty quickly. But this is really what it is. This is the checklist. First up, I pull up the 1 hour. This is how I start off my top down. And then after that, I identify market structure using the K2SR zones. So the first thing I do is I turn on the K2SR indicator version 2. Once I have that on, I just zoom out so I can see the entire chart. And then from there, I draw my zones. So you guys are familiar with drawing the zones, right? Or do you guys have issues with that?
That too. Now I know how to draw the zones, but I want to know, because I do see that you sometimes merge some together to see how, okay, what do we have to do when we merge them together? What zones do we merge together?
Definitely. Okay, perfect. Yes, that's a common issue. So I'll definitely start with that. So I'll just zoom in a little bit right here. And you can see that there's actually 2 sets of zones that are overlapping right here, right? So you can see that we have this zone right here, this lower zone, and this upper zone right here. So when they overlap like this, for example, we have this lower zone right here. And if you just draw this zone right here, you can see that it overlaps with the other one, right?
Right.
So when you see that, I'll just pull this up a little higher and I'll merge those together. So basically, when I'm doing my analysis, whenever they overlap, I'll just merge them into one zone. It's a little different when I'm doing, like if I'm applying the Forex K2SR strategy, that's where I'll like merge them even if they're too close. Like for example, right here, for example, right here, if these are like too close like this, like say right here, we have 2 zones, and if they're too close, then I would just merge them. But that's using the other strategy. And the reason for that is because for the K2SR strategy, we trade from zone to zone. So for example, here, if this zone is so small, there's really no point in us trading within the zone, right? Because it's only like, 10 pips or something like that. So that's going to be different. That's a totally different strategy. But for indices and normal analysis, I usually like to separate them even if there's a small gap in between. So basically the rule of thumb is if they overlap, then you'll merge them. Like for example, right here, there's 2 zones right there. If they overlap, instead of drawing, one small zone in between, we just draw one big zone to cover both of those zones that overlap. And then once you do that, that's pretty much it for the most part. So you guys get that, right?
Yeah.
Okay, perfect. So like, for example, right here, this is something that might confuse you because it looks like they're kind of separate, but if you just draw one zone, you'll see that it overlaps with the other one. So when that happens, we'll just connect these together like that. We got another zone right here. And another thing that I like to do as well is when I draw my zones, I like to start from where they finish. I mean, where they start. So like, for example, right here, you can see that the zone gets created on this candle right here. So when I see something like this, I will, I'll start from here instead of drawing the zone like from down the middle, because sometimes when you draw down the middle, it's kind of hard to see where it begins from. So what I generally like to do is draw the zone from where they start, from like right over here. And then for example, over here, and then again over here for this green one, I just merge these together. This right here as well. And lastly, this one down here. So that's pretty much it. Once you draw your zones right there, you can just turn off the indicator.
So basically we draw them from where they start on the high and lows.
Exactly, yeah. So let me just take this off again so I can show you. Yeah, because I see sometimes I see people draw their zones like from over here, and this is where it gets kind of hard to see because you see that you're not really sure where they overlap or not.
Wow.
So like I think it's a lot easier if you start from where they actually get created, like over here, and you can see where they overlap with other ones.
Because I do see like on my trading view, there are some that are smaller zones, and there's some that are longer. That's because they started further back.
Exactly. They either started further back, or one thing too is when you so at the beginning of the week, usually they cut off. So that might be the issue there. So like if I was to here, let me just see if I could, or actually it's not gonna, let me see if I could go to another chart here. So if I'm looking at like US 30 and I go over to because this is one problem that I see a lot of people run into too sometimes, where they'll be drawing their zones and then they're like, what happened to the zones? Like the zones just got cut off out of nowhere. Let's see, today is the 23rd, 19th. Yeah, so if I replay over here, you kind of see that these kind of cut off a little bit right here because these are from last week.
Yeah.
So these cut off. Generally, they're supposed to continue on if it's a brand, like for example here, these are from this week. So that's why they extend all the way out. These are from last week, so they cut off because the zones become brand new each week.
Okay.
So you can see the difference here. Generally, if you have your settings proper, if they cut off like this is because they were from last week. And the ones that continue on over here that extend all the way through are from this week. So they're current. But even if they are from last week, they're still important. So you should still draw them anyways. So that's the difference between these getting cut off, unless your settings aren't proper. So for your K2SR, they should be set to 100 bars and 500 length. That's just so that the length goes across your entire screen. The only time that'll cut off like this is if they're from last week. So that's the main difference.
You said 100 bars and 100 length?
Sorry, Karen, I can barely hear you. I think your mic might be kind of choppy.
Is it? I said you said 100 bars and 500 length.
Sorry, I couldn't hear you, Jeremiah. Can you hear, or is it just me?
Yeah, it is a little choppy on her end. It has an echo.
Yeah, it's like you might have something too close to your mic. Maybe your phone's too close to it, or it might be too close to your screen.
It is. She probably just got an old computer too.
Oh, okay, gotcha. Yeah, because usually that usually happens if your mic's like too close to your screen, or if it's too close to a cell phone or something. That's kind of like interfering with your mic.
Yeah. You can go to the settings, Mom, and turn the mic volume down.
Okay.
Just put it on mute for.
Yeah, it might just be overlapping with your voice. So you might have the audio on and then the mic's like overlapping with your voice at the same time.
Yeah, I ran through a test run before I got on here for my mic volume and everything.
Yeah, no, I used to get that all the time too. So I had to buy a separate mic, which is fine. I mean, it works better for us too, so you guys can hear me as well.
Oh yeah.
But yeah, I was trying to figure out. Did you hear what your mom said? I couldn't hear what she was saying at all.
I didn't hear what she said, but I mean.
You hear me now?
Oh, we can hear you. You're good now. There you go. Perfect.
Okay, I tested the microphone.
There we go.
I said, oh my goodness, I forgot my question. Oh, you said 100 bars and 500 for the length for the zones?
That is correct. So for the bars, put 100, and then for the lines length, you'll put 500. The only reason we put 500 is so that it goes across the entire screen. So it's easier for us to draw. Like for example, here, they extend all the way across the screen. It's not necessary. I think the default one is like 100. It's not necessary, but it's just a lot easier for you to draw your zones if you have them actually spread all the way out. So it's by preference. You don't have to do it, but that's what I like to do if you guys want to do what I do.
Okay.
Yeah. All right, cool. So I'll go back to here, and I think I answered your question, right, Jeremiah? Was there another question?
No, okay. It was basically about the graphs. I mean, not the graphs, but the zones, how they do cut off from week to week, you said.
Gotcha. Okay, perfect. Yeah, so that's good. That's good right there. So basically, once you're done drawing up your zones, that would be the second step here, identifying market structure using the K2SR zone. So once you have that drawn up, you can turn off the indicator. And then once you zoom out, you can see it kind of gives you a storyline. Like it kind of shows you what happened, before it got to where it currently is. So it kind of shows that like price broke into the structure, went sideways, shot up. And then now from this point, this area down here is kind of relevant because price is now above here. So this would be the, the relevant market structure. So once I draw that, I'll just like zoom in a little closer. And this is pretty much what's important for you right here. Because you can see that price kind of goes from like, this would be the previous market structure right here, where price was going like throughout February. And you can see how price kind of moves through. So like, for example, here from February 5 until, let's see, February 5 until March 5th, you could kind of see how price breaks into this market structure within this area. And then it just kind of goes sideways for a bit before it breaks above, comes back into it, breaks below, comes back into it, and then just goes sideways up until it finally breaks into another structure in this area over here. Could you guys see, do you guys understand what I'm saying?
Yeah, so basically it tests every zone, and sometimes it'll consolidate in between zones till it actually breaks to a different area.
Exactly, because you could get like, for example, you kind of cut this up. Like you can see that there's market structure here, and it pushes up to this area. This becomes a new market structure. Then it shoots up to this area, and this is the current market structure. So once you get to this area right here, you could kind of just focus in on this area where it's currently in, and you can see that, from this point here, you can see that price was kind of bullish this way. It hit a high up here. And then from that point, now it's coming down. So at this point, you probably have a sell bias because it looks like price is just gonna, continue pushing down. But this is where we'll dive into it further. So once you have market structure drawn up and you kind of see what's going on here, let me pull up the checklist again. Pull it up over here. Once you have this all set up, next up, you will turn on the K² momentum indicator to identify what the current bias is. And the current bias will just be like the direction of momentum at that specific time. So for example, here, you could kind of see that when price reached this high over here, it's just been coming down this entire time, like from here. And you could even use other tools to just make things a little cleaner if you really want to clean it up. You can do something like that. And then you can see that price is currently in a downtrend right now. So this isn't really, it's not really necessary, but this just helps you understand the bigger picture, right? Like what I'm trying to do here is give you guys an understanding as to how price is moving, and you're not confused, or you're not kind of guessing like, oh, should I take buys? Should I take sells? If you see it's like in a downtrend or that it's going down consistently, then, you kind of have a bias for what to look for. Because obviously you can take buys here and it'll work sometimes, but, it'd probably be safer for you to just trade in the direction of price. So once you have this set up, the third step, turn on the momentum indicator. We already know that it's coming down. And then since we have a sell signal right here, this is going to justify our bias that, we should only be taking sells at this point. So, with that said right there, that's pretty much all that you really need to do. And then once you have this, this market structure and everything set up, now you can just focus more on this end right here, because you already kind of know what's going on. So that's what I mean about the top-down analysis. We look from the higher, from the bigger perspective over here, we see that it goes from this area to this area. We focus in on this area right here. And then this structure, this market structure has been up here since March 11th or March 10th. So you can see like from this week, March 10th up until like March 16th, it was bullish. And then from March 18th up until today, it's now bearish. So at this point, we're like, all right, we should just look here, and you can zoom in even closer. And then from this point, you can start playing out scenarios. So now that you have a bias right here, you can kind of see like, oh, what can possibly happen in this area? And then from this area, there's a couple of things that can happen. Like, for example, we have a sell signal here. So you already have a sell bias. Looking at current price right now, you can see where price is kind of going sideways right here. Within this area right here, it's just going sideways. So like basically one scenario is that price can reject off this, come back down. And then if that was to play out right there, you can possibly enter a short there and then continue writing it down if you really wanted to. That's like scenario number one. Scenario number two is price can reject off this point, provide a buy signal or something like that. And then it could possibly continue up even higher. So you guys kind of get what I'm saying, right? With the identifying scenarios. And this is just going to, like by doing this, you're going to feel more confident about the trades that you take. So for example, if your bias is for a sell and you're looking for this sell bias right here, then you can go to the shorter time frames, like the 10-minute, And then obviously you can draw, once you start scalping on this time frame, you can just draw your zones on the 10-minute right here. And you can see, price is rejecting off this point. From this point right here, you have a sell signal. You're like, okay, at this point, you could probably look for some sells. So that's kind of what I mean about the whole top-down analysis. But once you've identified everything on the 1 hour, then that's when you can go down to your 10-minute, and then you can start looking for 10-minute scalps. So this is kind of like the bigger picture of things. I mean, you don't always have to do this, but if you want to have a real understanding as what US 30 is doing, this would definitely help. I mean, it takes a lot of time if you want to go and do this, but the more and more you guys do it, the easier it'll become, because this is all about repetition. For me, you guys see me analyze things. It takes me like a few seconds. Obviously for someone that doesn't know what they're doing, it'll take them like a couple hours, maybe a couple days in some instances. But the more and more you do it, because I do this every single day, so it's literally like clockwork for me. I know what to look for. I know how to play out the scenarios, and then from there, I can go from this 1 hour down to the 10-minute, and then I can just delete everything off here, and then I can start looking for some scalps at this point. So I delete everything. I start looking for structure here on the 10-minute. And then I can turn off the momentum indicator. So if you're not planning on using the momentum indicator, you can just turn it off. I like having a clean chart. So I usually will draw like the closest structure. I'll turn on the pivots, and I'm like, all right, cool, perfect. So I'm looking around right here, and then I can see that, the most recent entry was right over here. So, with that said right there, you can just, map it to see how this played out. And you're like, okay, is this still running or not? You do the whole 500 pip thing right there. And then this is where you'll start looking at if you want to go in the shorter time frame, because there's a lot of ways to do it. Like, for example, this is the 10-minute scalp. And once you have this marked up right here, you can see that this move actually hasn't completed yet. So, at this point right here, you can just go down to the shorter time frame. Like, this is what a lot of other people do. They go down to like the 3-minute or the 5-minute, and then they'll take even more scalps within here. Like, obviously, this is going to be a little more advanced for you guys. Like, you should probably just stick with the 10-minute for now. But, once you get comfortable with things, you can go in the shorter time frames, and then you can see that there's like more entries that are available all throughout these areas over here. If you turn on your K2SR, you can see that there's more entries. And this is what I mean about the whole top-down analysis thing, because you can go from the 1 hour to the 10-minute to the 3-minute, and then you could find, better entries or like tighter entries if that's what you're necessarily looking for.
Right. I mean, we don't like it too quick. We try to sit back and, let it play out, because when it moves too fast, we get too, nervous or too worried about the trade.
Oh, definitely.
We'll start to making mistakes.
Oh, 100%.
That's why, we want to be more, like, we understand it, but we want to be 100% more accurate and more confident before we start making decisions.
Yeah, no, definitely. Yeah. So this would help you in like a lot of ways if you want to actually like understand how US 30 is moving from the top-down analysis. But if it's the case where you don't really care about what's going on in the higher time frame, and you'd rather just go for the scalps, which is what a lot of people do, and it works perfectly fine. We can skip that because we already covered that, and go straight into the scalps if you guys want to cover that.
Yes. Yeah, like the pivot scalp strategy.
Okay, perfect. So the pivot scalp or the Snipe strategy, since those are a little different.
Both, really.
Well, which one would you suggest? Like,
they're both fine. It's just that the pivot kind of gives you later entries, because you're waiting for the momentum signal for that confirmation. So it does still work. Like, for example, let me just see if I can pull it up here. Like, for example, right here, like this would, I'll show you guys the pivot strategy, because basically the Snipe strategy is kind of like it's a branch off the pivot strategy. We just added a different requirement. So I'll show you the pivot strategy first so that you guys can see. This is going to be the K2 pivot strategy. Scalping. All right, I'll just do K2 pivot scalp strategy. There we go. So for this, you're just going to confirm direction of trend using K2 pivots. Second, confirm a retracement in price. Third, confirm rejection off K2 pivots area. And lastly, confirm valid K2 entry, or valid K2 momentum signal. Once you have all that, you can enter on the open of the following candle. So they both work. It's just this one is it just takes you're not going to get as many entries with this one because you're waiting for an actual momentum signal. So instead of just waiting for the rejections off the structure and pivot, for the Snipe strategy, for this, you have to wait for the actual signal. So this is going to be a little, you guys can learn this and then you guys can figure out which one you guys like more. I think you guys will probably like the Snipe strategy more. That's what everyone's been using lately. This is what people used to use before before I release the Snipe strategy out to you guys.
Then we can just do the Snipe strategy. You want to just do that with Jeremiah?
Yes. I mean,
Yes.
I just want to make sure I got them all down because I got
this
one.
notes.
Yeah,
we can do the Snipe. The Snipe is the one with the confirmed wick rejection off the K2 pivot.
Exactly. That's one that we've been using a lot. Like this one kind of faded out once I introduced the Snipe strategy, because the Snipe strategy just gives it gives more entries. You know, everyone wants to take more trades, so that's why we kind of moved over to that.
Yeah. Now let's turn the Snipe one.
Okay, perfect. So I'll go ahead and just delete this right here. Let me get the another one right here. So this is a K2 Snipe strategy, US 30 10-minute time frame. So first you want to confirm wick rejection off K2 pivot, any pivot. 2, confirm wick rejection off K2 SR zone. And lastly, you just want to confirm wick rejection off pivot does not touch candle body. So it's pretty simple. It's self-explanatory. So let me see if we can find some zones real quick. All right, so we got one right over here. You guys got some background noise going. Not sure where it's coming from. All right, there we go. There. All right, so I'll just draw these zones right here because these are the only ones that are relevant right now.
Okay.
So basically, for this strategy, you only need the K2 pivots and the K2 SR zones just to identify, you know, the rejection points. So looking at this right here, let's see, the first available entry would be right over here. And looking at the requirements right here, first you want to confirm wick rejection off a K2 pivot, which can be any pivot. So for this green candle right here, you can see that this candle is rejecting off this specific green pivot right here. So with that said, I'll just rewind it to this candle over here. And there we go. So first requirement, confirm wick rejection off a K2 pivot, which would be this green pivot right here for this green candle. Second, you would confirm a wick rejection off the K2 SR zone. And since it can be inside the zone, you just need to see that, you know, the wick is kind of pushing off like one of the structures here. So you guys understand that when I say a wick rejection off a K2 SR zone?
Yeah.
Okay, because that's like a common question that I get where people don't understand what I mean by like a wick rejection. It literally just needs to push off a zone. It can be inside the zone as long as it's indicating that, you know, price is pushing outwards. So right here, we have the wick rejection off the pivot. We have the wick rejection off the K2 SR zone. And lastly, you just want to make sure that this pivot right here doesn't touch the candle body. So this is going to confirm that it's a clean rejection. With that said, we can enter a short position right here at the close of this candle. So this candle closes right here above since it's a green candle. And then we set our TP stop loss to 500 pips. And with that said right there, we let it run. And there it goes, straight to TP right there. So pretty clean move. There's actually another entry right after it. So this green one right there, that would have hit full TP. And if you look back to here, there's actually a second entry off this red candle right here. So if you missed the green one, you could have taken this red one right here. I'll zoom back over here. And then you can see that all the requirements are met right here as well. We have the wick rejection off this green pivot. We have the rejection off this structure right here. And we just made sure that this green pivot doesn't touch the body, which it doesn't. So if you were to take this trade here as well for another 500 pips, this would have hit TP right there as well. So you can see right there, it's pretty simple and it's pretty self-explanatory. That's pretty much it for that strategy. So is there something that confuses you guys with the strategy so I can drill in on that? Or is there a trade that you guys took before and didn't understand, why it lost? I'm just trying to pinpoint what the issues are with your guys' analysis of the strategy.
Basically, what it is understanding like you said, the common question you get, the wick rejection.
Mm-hmm.
Understanding how to be able to tell that that's an actual wick rejection.
Mm-hmm.
You can see. So basically, if the wick doesn't go to the next pivot, that's the wick rejection.
Exactly. So like the wick rejection off the pivot would be the farthest pivot. So for example, over here, let me see if I can find one over here. So for example, you'll find a better example over here. So I'm trying to see one where it rejects off two pivots. Okay, so like this red one right here. For this red one over here, you can see that this wick right here, if I zoom in, you can see that this wick is rejecting off the green and yellow pivot. So if you're using this as an example, the farthest pivot would be the yellow one. So in this case right here, if you were looking at this as an entry, which I mean, obviously it's not an entry, I'm just using this as an example. If you're using this as an entry, you would ignore the green one and just go for whichever one is the farthest. So like, let me see if I can find it. Oh, like for this one right here too, this red one. So for this red one right here, you can see it's rejecting off the green and the yellow, but since the yellow one's past the green, you would be focused on that yellow one. So, for that third requirement where you want to make sure that the pivot isn't touching the body, it would be that yellow pivot, not the green one. Because that's another common question I get sometimes too. Let me see if I can find a better example here where it's kind of close. Let's see. Like this right here, like this green one right here. I know this isn't an actual entry, but this green candle right here, you can see that the yellow pivot touches the body, but the green pivot doesn't. So this is a common issue that a lot of people run into where they get confused and they think that, oh, because this yellow pivot is touching the body, it's not a valid entry. But for example, if there was a zone in this area and it was rejecting off this green one, the green one would actually be the pivot of importance. You're basically just looking for the farthest pivot where it's pushing off, just showing that, price is going to be bouncing off that and it's going to be shooting in the opposite direction. So does that make sense to you guys?
Yeah.
Okay, perfect. Is there another question that's like specific so I can explain it for you guys?
No, I think I got it. Can we look at a pair or and with the same snipe strategy and see how that plays out?
Basically, something that we don't understand either is how to play out scenarios too.
Okay.
Best way how can we tell? To play out the scenario and in what direction. And
well, when you look at the trend.
Yeah.
Okay, perfect. So do you guys want to look at a Forex pair or do you want to keep looking at US 30?
Forex pair.
Forex pair? All right, cool. Do you guys have a Forex pair that you guys like to trade?
Euro USD.
All right, let's pull that up. Euro USD. Okay. So I'll do the same analysis I did earlier. I'll start from that top-down analysis and you actually, depending on how you want to trade it, do you guys want to see the top-down analysis from the higher time frame, or do you guys want to just go straight into the scalping? I'm not sure like how you guys necessarily trade it or like to trade
straight
it.
Into the scalping, basically.
Okay, perfect. So going into scalping, what I recommend for Forex pairs is to scalp on the 30-minute. Some people do it on the 10, but the problem with doing it on the 10 is that it doesn't really move that much. So if you're trying to catch a scalp, and I don't know, my spread here is not that bad. It's like 1.5, but if you're trying to catch a scalp and your spread is like, 6 or 7 pips, it's going to be impossible for you to catch a 10 pip scalp, right? So you kind of have to go on a higher time frame depending on how big your spread is. If your spread's tight, you can always go down on the 10-minute. So this will translate to the the shorter time frames too. But just for demonstrational purposes, we'll go on the 30-minute, and then you guys can basically apply the same thing. And you can see here, like this looks pretty much the same as the 10-minute here. It looks like it's pretty smooth. The only difference is that you can see the movement here is only like 10 pips. So like a 10 pip move here within an hour versus a 30 pip move over here, it's going to vary dramatically. It's going to go from like 10 pips to like 20 pips. So just depending on how you guys want to trade it. I recommend, since you guys don't like to, focus on things that move too quick, 30-minute might be best for you guys. So same requirements apply here. And we'll go over the scenarios later, because in order to go over the scenarios, we have to be on the higher time frame, because it's going to be from the 4-hour analysis. But right now I can go over just the scalps with you guys here. So this is pretty much the same thing. It's just going to be the K2 Snipe strategy again. First, you want to confirm wick projection off K2 pivot. Should be any pivot. Confirm wick projection off K2 SR zone. And lastly is confirm wick projection off K2 pivot. It's not touch. Candle body. So another thing too with Forex is since I don't trade all of them, I don't have a sweet spot for them. But I'll show you a little trick that I do, right? We can kind of identify where the sweet spot would be. So first things first, I'm going to draw my zones so that we can identify an entry, and then we can go down from there. And it's pretty much the same exact thing. We just, if the zones overlap, we create one big zone. And then once we have these zones, we can start looking for actual entries.
Yes, a way I figured out like the sweet spot for numbers, because every trade has the different ones. I usually like measure the swings just to see, how many pips the swings went down and went up, just to see if like get an average in between of numbers. Like for my US 30, 25 is my sweet spot.
Oh, perfect. Yeah, no, definitely. Yeah, like that's a good idea too. Some people use that, and some people, what they do sometimes is they'll actually take half of the swing. So for example, here, let me just go back, because there's an entry right here off this green candle. Yeah, so off this green candle right here, I'm just going to circle it for you guys. There's an entry here. And there's an entry here because there is a wick rejection off this green pivot, and it's also rejecting off these K2 SR zones right here as well. So with that said, and confirmation that this green pivot doesn't touch the body, this would be a sell entry right here. So there's a couple of things that people do. Sometimes they do go back to the swing, like you mentioned, which would probably be up here. I mean, depending on how you identify it, because if you swing down here, this could be a swing. And this is why it's kind of hard, because, it's subjective, right? It depends on how you see it and how other people see it, because this can technically be a swing here, because price swings down, swings back up. This would be the first level swing. The other swing would probably be up here, because price swings down and then swings up to this point. So it's a huge difference. From here,
I usually do it by the from the signal. So like when it swings from the signal, I usually count the pips from the signal to the next signal to see, what's those really average out.
Oh, gotcha. Okay, so the momentum signal, right?
Yeah, the momentum.
Okay, gotcha. Yeah. So you go like way far back here then.
Yeah. Well, no, I do it so from the green signal to the last buy signal to the sell signal. I do those pips, and then I do it from the swing from the red to the before the sell signal. Sorry.
Gotcha. Okay, so you just measure it something like that.
Yeah.
Okay. Yeah. Perfect.
And then I do the half of that.
Perfect. Okay. That's perfect. Yeah. So that's kind of similar to what I was mentioning too. So this is 40 pips right here. Going back to this right here, it's about the same. It's like 42 pips from this swing. But yeah, if that works for you, continue to do that, because it really depends on what works for you. Because there's really no wrong way to do it. Honestly, like there's no way you can really, pinpoint that it's going to get to this point. It's going to swing from there. You'll never be 100%. So if that's what works for you, and you see that it's consistent, then continue doing that. That's actually the first time I've heard that before, but that sounds like a good idea. So maybe that's something I'll probably look at. Generally, what I would do is I would either place my stop loss at like the middle of the pivots right here, which would be like 15. And that's kind of similar to what you would have calculated as well, because this would be 40 pips. So half of that would be 20 pips. You're just a little farther above. So they're kind of they're going to be around the same area. So there's no right or wrong way to really determine where your swing is. The main key is that you just don't want to have it too close, because some people just have it way too close. And a lot of times it'll trigger their stop loss before it gets to their TP.
Yeah,
So
I usually try to look for, a strong structure. So if it has a lot of rejection, then I say that's a strong rejection area. And if it has a lot of support, then I say it's a strong like support area, just so I know like it's gonna, if it hasn't broke those zones and it keeps following the same pattern, then I say that's gonna be, strong spots to trade off of.
perfect. Yeah, no, definitely. You're spot on with that thing. So you know exactly where to put your stop loss, because there's a ton of different ways you can place it. Like you can place it at, the previous structure, or like, like the farthest structure for price currently is where it swung. I mean, there's a ton of ways to put it. So for example, just using your example there, it was about 40 pips here. So with 40 pips, half of that would be 20. So we can set the TP stop loss to 20 right there. And that looks perfectly fine, because it looks like something that I would have did anyways. So this looks good right here, because generally I would either put my stop loss at, one of the back two pivots right here, the orange or the red pivot, or I would place it at the swing, or sometimes I would just let TradingView do it for me. Sometimes I'll just click on this zoom out button. I'll just click a short position right here. And then, as you can see, TradingView does it automatically, and it's pretty much close to yours as well. When TradingView does this, it places your stop loss at the previous swing, and then it incorporates the average true range in there. So it's a little more accurate, but sometimes it's kind of like really far off. So I don't like to use it all the time. Sometimes it'll give me a swing that's like way up here, like 100 pips, and I'm like, that's way too far. So that's just another way that you can do it. But if this way works for you, perfectly fine. So right here, we have all of the requirements met, and that's pretty much it. We're applying the same exact strategy that we did for US 30, just on the higher time frame and for a Forex pair. So with that said, if we were to enter this and let it run, you can see it goes straight to TP right there. So it works both ways for Forex or US 30, or I don't know, gold, anything that you guys really like to trade. It's the same exact requirements. It's just done on a different, different asset, different time frame. And the stop loss is just a little different, unless you know what the sweet spot is, from your own practice. The only way that I got the sweet spot for US 30 is because I back tested the same strategy. Like I went far back, I went 10 years back. I just kept on like practicing. I saw that 50 pips or 50 points was like the sweet spot, because it kept showing up. So that's how I figured it out.
I go through every time zone and I look at where it was a month ago, a day ago, a couple hours, and I just sit there and just try to get to see the direction it's going in, and how many does it rise, how many does it fall, and when it consolidated, how many does it stay in between the consolidation area, just so I can basically put all the numbers together and see like what do I feel comfortable going with.
Oh, that's perfect. Yeah. So you know how to do this stuff. Like some people they don't have like a thought process in figuring it out, but you already know what you're doing. So that's perfectly, that's great that you have that. It's all about repetition. Like you said, you just go and you test each session and you see how things move. The difference with US 30 and your USD is that, like for Forex pairs, you can tell that they move totally different during each session. For US 30, it's kind of just smooth all throughout the day, aside from like New York session early morning. So it's definitely good that you're able to identify that for pairs like your USD. But as you can see, this is pretty much the same. Not really much differs from it, aside from just where you place your stop loss. Yeah. So is there anything else you guys want to cover from the Forex, or do you guys want to go over more examples, or is there something else that's confusing to you guys?
Yeah, can we go over just the indicators? Oh, well, not the indicators, but
no, yes, I do. Shawn, I do. Okay, so on your screen, you have like the numbers. I guess that's the high and lows. What indicator is that you have?
Oh, that would be a pivot high low. So if you go to indicators right here, you just type in pivot, and it's the built-in indicator for for trading view. So if you just click on this right here, pivot points high low, that's going to be the indicator that shows these high low numbers right here.
Actually, yeah, can we go basically I got it written down as the K2 indicators for the indices scalping, you know, the 3 steps that you take in there. Reading the trend meter. So when it's blue, that means it's in a buy, and when it's red, it's in a sell.
When it's blue, it's neutral. So when it's blue, it's consolidating. When it's green, it's buy, and when it's red, it's sell.
Okay, so when it's blue, it's consolidated. Let me.
Yeah, exactly. So like down here, you know, depending on which time frame you use it on, you can use it on like the intraday settings for me are generally the 30-minute, 1 hour, 2 hour, and 4 hour, because I would like to see, you know, where trend is moving for that time period. If you're scalping, you could always go on the short time frames, like say something like the 1 minute, maybe 3 minute, 5 minute, and 10 minute, or even farther. You can go from like 30 minute, 15, 10, and then maybe 3 or 5, and then you can see that it kind of changes down here depending on how you're looking at it. So just depending on what you're trading on, like obviously if you're scalping, you'd probably want to go on the shorter time frame, like the 10, and then you can see that the trend meter kind of adjusts a little bit. So it's really up to you, and it's customizable to how you want to trade it. But for scalping, I'd probably use the shorter time frames, because generally you want to have the farthest time frame, like how long you generally feel like holding it. Like, you know, if you're scalping, you're not going to hold this trade for like more than a couple hours, or even more than like 30 minutes in some instances. So, you know, the farthest trend that you want to look for is up to 30 minutes, maybe up to an hour in some instances. But for the most part, I think 30 minutes should be pretty solid. So these are the settings I'd probably use for scalping. For intraday, I would probably use like the 30-minute, you know, 1 hour, 4 hour, or 1 hour, 2 hour, and then 4 hour. Because generally for intraday trades, I'd want to hold on to it for maybe like 4 to 8 hours so that I can see what's going on from there. And as you change it, you can see that the colors here kind of change. So that's the difference with the trend meter down here. And basically, you know, it's really going to be a plug and play depending on how you're trading. So for example, going back to the scalping settings over here, I don't necessarily use it for scalping too much, because the pivots also identify the trend. So I mean, you can use it for a double confirmation if you really wanted to. I just feel like there's just, if you have too many confirmations, it'll throw you off, right? So for example, here you can see prices trending up because it's above the pivots. Do you guys understand how that works with the pivots?
Yeah.
Okay, perfect. So when price is above the pivots and the pivots are angling upwards and spread out, that's going to indicate that price is trending upward. So for example, here you can see that the trend meter is blue, but price is trending up. So if you're using the trend meter to identify the trend, and you would identify this as a scalp right here, you might have wanted to skip it because you would have looked at the trend meter and said, you know, this isn't green right now, so maybe it's not a good time to enter it.
That was what was confusing me this morning, because mine was just like, it was blue the whole day, and I'm just like, well, everybody's saying there's entries. I'm like, but it's blue.
Exactly, yeah. And that's why we don't really use the trend meter for scalping, because price moves so fast that it's not always going to be moving the same direction for, you know, all these time frames right here. It's more so used for the higher time frames, because you know, if you're trading on the higher time frame, if it's trending on the 30-minute, the 1 hour, 4 hour, and the daily, that's going to indicate that price is just going to keep going up, you know, until tomorrow overall. But if you're scalping, those are quick moves. Like you can't really look at different time frame trends, right? Because if you're looking for a quick scalp on the 10-minute and your trend meter is looking on the 30-minute, like 30-minute doesn't really matter to you, because you're focused on what's happening now, not then. So I wouldn't necessarily use a trend meter for scalping. I mean, you can for extra confirmation if like you really want to be very careful, but in a lot of instances, I think it's kind of overkill. It's too much to add on to, because generally if you have too many requirements, you're just going to get like, what's it called? It's called analysis paralysis, or like you look at too many things and you're like, is this an entry? And you start to second guess yourself. In reality, you should have just taken that trade. You should have went with your gut, because it was an actual entry. So
that'd be my problem.
Yeah, no, definitely. And you know, you're never gonna really get over that until you get confident with the strategy. Like once you have enough wins with that strategy and you feel confident that it's consistent, that's when it'll start to fade away. Like you can see on the live sessions, I don't even think about trades most of the time. I just see it and I'm like, oh, I'm gonna take it. I'm like, if you guys want to take it, go ahead. Because I don't really think about it because I know that the strategy works. I know the win rate for the strategy. So it's like if I take this, if it ends up being a loss, it's just a loss. You know, it's not something that I see that's going to keep losing. It's just that was just a bad trade. And that's something that just comes with time. Like the more and more you practice it, the more wins, the more losses you run into. That's when you'll start to trust it more, and you won't second guess. Like you won't second think yourself as much as you did, you know, in the past. But you know, like I said, it's all trade psychology. That's really what it is, because I already gave you guys a blueprint for the strategy. It's all about just applying it. And it's really your trade psychology that's stopping you from taking these trades. Because, you know, you already know the trade's going to hit, but in your head, you're like, what if it doesn't hit? And that's what makes you not want to take the trade when you should have just jumped in. Because in a lot of instances, you'll see a trade and you wait too long. And by that time that you waited, it's already hit TP. You're like, damn, I should have just entered that trade. So that's common. You know, it's not something that you just get over overnight. Like even myself, I've been trading for like 10 years and I still get it still gets me sometimes, especially if I'm like listening to someone else's analysis. That's why for me, I don't really like having the audio on during the live sessions, because there's always people that have different analysis, and it's like if someone's telling me something different, it's going to throw me off, because I'm like, I'm already set on this buy, but someone's telling me not to sell. I'm like, all right, do I listen to this person, or I just do what I knew was going to happen in the first place? And you know, that's kind of like how you should approach things too. If you think it's right, then it's right. You know, you got to go with your gut. You got to know that that you identified it properly. As long as all the requirements are met, you just got to go with your gut and see if it plays out. If it doesn't play out, that's cool. You know, eat that loss, move on to the next one, and never get caught up on like one trade. Because I see a lot of people, they'll take one trade, they'll have a loss, and they'll be like, they'll not understand. They'll be like, I had 10 straight wins and I have one loss. And then they just get stuck on that one loss, and they get scared. They don't want to take any more trades. But as long as you understand that it works, and that was just, you know, it was just a fluke, like, you know, it happens every so often, you can move on from that and continue, you know, trading like a robot, basically. That's kind of how I am now. Like, I don't have any emotion. When I have a loss, I'm like, all right, whatever, it's a loss. And then I move on to the next one. And then the next one's a winning. So I'm like, all right, at the end of the day, I'm like, I broke even or I'm in profit. So it's not really it doesn't affect me that way.
That was my issue in the beginning. But I had read some of that book, Trading in the Zone.
Oh yeah,
That was me. Mm-hmm. Right. I had took so many losses, I was just scared to trade. That's why I just stopped trading, because I had blew so many accounts. And so he was saying with the traders that you have to, if you know you do the proper risk management and you know what your win and loss is, then you shouldn't, you know, you should be able to set it and forget it and not worry about that trade.
Mm-hmm. Yeah, I agree with you 100%. Yeah, that's a book that I actually read like a lot of times, because that was one of my main problems. Like I had a strategy that worked. Like I've had this strategy for a long time, and I didn't really start applying it consistently until I finally, you know, got over that hump, and I realized that, you know, I gotta do it. There's nothing to it. It's really just executing. And once I kept executing, you know, I would run into losses here and there. But then once I started documenting my trades, like especially with K2's helped me a lot, because I have to document the trades. So I see that it actually works long term. And it's not something where, you know, you trade for a month, you have some losses, then you take a break. And during that whole time you took a break, those could have been a bunch of wins that you just missed because you decided to take a break. But since I trade every day, you guys kind of see, you know, what's possible as long as you're consistent with it. You know, there's going to be losses here and there, but overall, if you trade every single day for the entire year, you know, you're going to end up in the profit regardless, as long as you use proper risk.
Yeah, see, because I started K2, I think in November, and I've just been following the calls and just basically trying to get a understanding of, you know, what was the gist of trading. But the reason why I stuck with K2 was just because I felt like when you called a signal or something, you were that confident. I was like, yeah, he knows. I'm like, I believe in his word, so I'm gonna go ahead and study from him.
Yeah, no, definitely. You know, it really just like I mentioned, it just comes with practice and like with repetition. Because the thing is, I've had the strategy for a long time, and I created this like I think I originally created this strategy maybe like 4 or 6 years ago, and I didn't use it consistently until maybe 4 years ago, and then 2 or 3 years ago, that's when I started sharing with you guys, and then that's when I when K2 became a company, and I decided to actually mentor people because I knew that it worked. So I figured, there's a lot of people that were in the same situation as me back then, where I was like confused. I didn't know if it actually worked. And I was able to give confidence to like a lot of people in the chat. Like it's crazy. When I see people's profits in the chat, I'm like, damn, people make more profit than me, and I'm the one that taught them how to do this. And it's like they have more confidence than me. Like they're so confident about the strategy because they see me executing every day that they don't even have emotions involved. Like I still have emotions that get involved sometimes, but these people trust it so much that they'll go full lot size and they'll hit their trades, and it's just consistent every single day. And that's the whole game of this whole trading thing is, it's really controlling your emotions and, executing. That's all it really is.
Also, got one more question. So I'm doing the FTMO challenge. Any advice for somebody that
So FTMO, it's like it's really a case by case basis per person. So I'm not sure like what are the issues that you're running into with FTMO? Because like it's really gonna I have to cater this answer to like what's your issue. Because for some people it's risk management, some people it's consistency, some people it's they get this big account, they never trained an account so big before, so they don't know what the lot sizes are. So it just really depends on like what's been the issue with you. Have you done it before? Or is this your first time?
well, this is actually my second challenge. The first challenge I was doing, I was doing too many over leveraging, so I blew it. So I actually stopped for a minute, then tried to actually get more information, understanding of it. But basically, what it is I for the lot sizes, be able to, proper risk managing with the proper lot size, be able to measure it out the right way. So I don't actually go too much over my daily or, bid too less, because I still got to get to a certain goal.
Oh, exactly. Yeah, no, definitely. So I think that the main thing with that is just understanding your lot size. So depending on what you're trading, if do you mainly just trade Forex on there, or do you mix it between Forex and US 30?
I usually do mostly US 30, just because I'm on the call every morning. But I do look at some Forex pairs on my own. Probably I feel like more in the London session because it moves a little better.
Oh yeah, definitely. Yeah, Forex moves best during London session. So if you're able to trade during that time, that's probably your best option if you want to trade that. So yeah, if you're trading, let's see, US 30, what account size are you doing for FTMO?
I started with 100, but now I'm at 50.
Okay, 50. So for the scalps, for myself, I use a 5 lot, and I'm doing a 200K. So if you're doing 100K, half of that would be 2.5, and then half of that, since you're doing a 50, you should be probably using a 1.2 or maybe a 1.3 per trade for the scalps. So this is just for the scalps. For the daily entry, you're gonna have to divide that even more by like
Yeah. So how I do it is I start with a 0.1 lot size
mhm.
till it gets to moving, and then I'll probably jump in for probably a one lot size. But when I'm in profit in the challenge, I usually up the lot size just to start grabbing more money so I can jump out quicker. So I'll do like a 1.5 lot size.
Okay, perfect. Yeah. So like generally what I do is so 5 lot is my normal lot size for the scalps. I'll do like a 1 lot for the daily entry, and then I'll scalp within it. So I'll scalp, like I'll have that running so that I can see where it's moving, the daily entry. And then I'll scalp within it. If I see like some 10-minute scalps or some 3-minute scalps, that's when I start to add on positions. While I just let the daily entry, run to TP1 or the full TP in some instances, if it's if it's a good trade. So one way to do it is, so you have 50%. you just want to make sure that you're not risking more than like 3% at a time. So if you're doing 50,000 times 3%, like you don't want to risk more than 1,500. So every time you go into a trade, you should have a calculated risk. Like for myself, when I'm risking a 5 lot, 5 times 500, I'm risking like 2,500. My max loss or my daily loss is 10,000. So for each scalp, I could run like, let me see, 10,000 by 2,500. Oh, sorry, 10,000 divided by 2,500. I can lose 4 back-to-back scalps, which generally doesn't happen. So like I'll have like one scalp running where I'm risking like 2,500 pips, and then I'll have the daily entry where I'm risking like 1,500 pips. So my total risk at that time is like 4,000. So if I lose both trades, I'm like well under the max loss at 10,000. So I'm only risking about 4,000 at a time. And then sometimes I want to add in another scalp. So if I'm adding in another scalp, that's like another 2,500. So like going into my trades, I already know that if I lose all of my trades, which is probably not going to happen, but if it does happen, worst case scenario, I already know what my risk is. So I already know if I lose all my trades, I'm only losing 6,500, and I'll still be within, the max loss limit. So it's pretty much the same thing that you would do for your 50K count. So what did you say your lot size was for the scalps?
For the scalps, I start off at a 0.1.
0.1. Okay, so 0.1 times 500 for the scalps. This is for the scalps, right? Not the daily entry.
Yeah, this is for the scalps.
Okay, the scalp. So for that, you're risking $50. So per scalp, you're only risking $50. That's fine because I think your max or your daily loss is I'm trying to think
2,500.
2,500. So you're like way within range. You could probably use.
I literally try to keep it as small as risk as possible, because I want to be more accurate.
Yeah, because if that's the case, you probably need to up the lot size because you'll probably never pass your challenge. If you're only making $50 per trade, because your target goal is like what 2,500, I think.
No, 5,000.
5,000. Oh, 5,000. So yeah. If that's the case, you definitely got to up your lot size because it's just.
That's why I jumped the lot size to a 1.5 or a 1 lot size after it gets. I want to say after I get about 10 or 15 pips in.
Gotcha. Okay, perfect. Oh, so you hedge your way in. So you try to add on positions. Okay, I mean, if that works for you, you can do that. I used to do that before too, but I feel like I used to do that a long time ago where I would have a small position and then I would hedge more positions in, and by doing that, I started to realize that I would lose out on a lot of profits that I could have just got in at the actual entry point. So if that works for you, continue doing it. But if like, if it's just not cutting it, then I would recommend just going full lots, like your full lot size that you would have taken for that trade anyways, which should, I don't know, it'd probably be like a 1%. So let's see, if you were doing that, 2,500 or no, sorry. So 50,000 divided 500. So your trade should actually be 500 per trade if that's a full lot size, because that would be 1%. That means that you can lose 5 back to back before reaching your daily loss. Wait, is that right? 50?
Yeah, well, that's where I'm at. Yeah, my risk managers, I try to lose and gain 500 a day. So that's my risk and reward.
Gotcha. Okay. Oh, per day. Yeah, you're probably gonna have to increase that because
Increase it.
because like for example, if you're doing 500 a day, well, let's see. So if you're doing your goal is going to be 2,500, 500. I mean, technically you only need like 5 good days to trade, but the odds of you having 5 really good days are slim to none in a lot of cases because you never really know when the week's going to be good or when it's not going to be. Yeah. So if you're this is the problem with the challenge. Like the problem with the challenge is just getting to that goal within that time period.
Yeah, so passing everything else, it's usually just we'll have one good day of trading, but then you know, that one good day, everybody's getting like 10,000, 5,000. So I only get probably like 2,000 or probably 1,500. But then for the next 10 days, then we're just, oh, it's no entries. We're small. You got to grab it here. See, that's my thing. And then I get in my own head and be like, is it safe? So it's just, you know, like you say, the trading, the education of trading, basically.
Mm-hmm.
Knowing what, if it's going to hit or not. You know, I always want to be too sure.
Exactly. Yeah, it's a whole trade psychology thing, I think, of you know, the whole trading thing. So yeah, the main problem with like running it this way, because your risk is like way too low for you to pass the challenge, because like you said, you know, you might have a good day, and then if you didn't, you know, if you didn't trade like how you probably should have that day, you might get close to not reaching that profit target goal. Is that usually your problem? Like everything's good, the only problem is not reaching your profit target?
Yeah, that's usually all my only problem. Like
Gotcha. Mm-hmm.
I've
So
only lost. Oh, I'm sorry. Go
no,
ahead.
no, no, go ahead, go ahead. Yeah, so basically the main thing that you can do is just increase lot size. So for example, you're only risking 1% per day, maybe increase that to 2% or 3%. Um, and it shouldn't really affect you too much as long as you're not taking too many bad trades, right? As long as you're still accurate with your trades and you're doing 3% a day, like for example, if you're doing 3% a day, you know, you're trying to reach 10% divided by three, you only need to have like 3.3 good days. If you could have a hot streak of 3.3 good days of trading, you could be done with your challenge within a week, right? Because I think that's the key. The thing is you're not taking enough risk. So what happens is it's like a snail movement. Like you'll move up like 1,000, or you'll move like a couple $100. You had a good day, $500. That's like your goal right there. $500, $500, and then you have one bad day, you lose 1,000, you're back to break even. And it's like there's really no movement. You're not really moving the pin back and forth. So you kind of got to move that pin way forward, and you might have a setback, but you got to keep moving it forward and forward and forward to reach that profit goal. So I think your main problem is just increase your lot size. Don't increase it too much. Increase it just like you're already doing 1%. So increase it to maybe two to three. Um, I wouldn't do four. I think three is the sweet spot. I think three is pretty solid, because in reality, you just need like 3 or 4 good trading days, and then you're good. That's how a lot of people pass FTMO, because once you're done with the challenge, then you can be safe, because there's no more limit. You know, you can be as conservative as you want. You'll still get a payout every month, right? That's the main thing here, and that's kind of how I am now, because I have a bigger account. So like, you know, with your 50K account, it's going to be kind of harder for you to really bounce around and pull out of trades early. Like for me, I could pull out a trade whenever I want, because I pull out like, you know, 30 pips in instead of going for the full 50, and I'm already locking in like 3,000 right there. You know, it's not a big deal to me. For you, it's different. It's like $300. You know, $300 compared to my 3,000 that's a big difference right there. You know, it's like, is that going to cover rent? Is that going to cover the stuff that I actually need the money for? So yeah, I think that the main way to fix your problem with FTMO is just increase lot size. I think once you do that and you just continue what you're doing, I think you should be good, because you really just got to move that pin up higher and higher, close to that profit target goal, and just pass. The main goal for you is passing. It's not hitting those home run hits. It's not being too conservative. It's just passing. You just got to hit that goal and then take penny trades from that point. Get to your verification. If you pass the challenge like that, your verification should be a walk in the park, right? Because if you've done that, like you had 3 good days for your challenge, you really just need to like 1.5 good day for your verification, and you're good at that point. So I think be riskier. Don't be too risky, but just be a little riskier. You know, just get you to that point where you can actually pass the challenge, because you already understand where the problem is. It's just executing and really going for that reach to go to where you need to be in order to pass that challenge. Have you passed the challenge before, or you still been going back and forth?
I've only tried it one time, and that time I felt like I wasn't really ready. I was trying to rush it.
Mm-hmm.
So this is my second time, but well, actually my third. My second one, I didn't pay attention to my end date, and I was probably like 1,000 away. And they gave me a repeat, so I'm on my repeat right now.
Perfect. Yeah, no. So you're good. So you understand now. Like you've already identified where your problems were, you've made changes, and here's your final change. This is all you need to do. And I think, you already gotten to that point where you should be able to pass. Because in reality, you can pass your challenge within a week or so. It's just using proper lot size, using proper risk, not too much to nearly blow your challenge, but just enough to get you past that requirement. Because in reality, at 10%, it's realistic, but it's difficult. Like a lot of people think, oh, 10% is nothing, but you're not going to have a great month every single month. Like some months you'll have like a 20% profit. Some months you'll have like a 5% profit. It just depends. It depends on the market conditions. So I think you have a plan set up, and I think you're good. You just need to pull through with what we just talked about.
Definitely. I got 2 pages of notes, I think. So I'm going to definitely be studying for the next couple of days and trying to work this in, because I'm already at my 10 days. Today was my 10th day, and I took that USD, got that win. But usually what I'm trying to stay above a 65 win rate, because it just looks better.
Oh yeah, no, definitely. Yeah, no, definitely. And it gives you that confidence too. If you have a high win rate, it just gives you confidence that, you can rinse and repeat what you just did for the next month or so. Because in reality, like I mentioned, like once you're funded, you don't have to worry about reaching those goals anymore. Like a lot of people try to keep going for those home run hits, and it's nice if you hit the home run hit, but like if you miss and you blow your account, it's like you go back and think about it, and you're like, damn, I should have just traded normally than going for those big wins or those big moves. Because I see some people sometimes, it's crazy. There's a lot of people where they'll trade, they'll be like $100 away from passing their verification, and they go like crazy lot size because they just want to go for like 1 pip, and then that's the one trade that doesn't go their way, and then they end up starting right over again because they lose their account. And I'm like, man, if you just stuck to, you were consistent with what you were doing to get to that point, you could have been done at this point. But you had to go show off and like go for this big move that you really didn't need to take, and there goes your account. So
my biggest thing, I usually tell myself, usually if it's not broken, then don't try to fix it.
Oh, exactly. Yeah. And like I was, like even with the strategy, like the same strategy, I've been using them for so long, and they work all year round. It's not like a seasonal strategy where they only work, during busy hours or, busy season. Like I've been using this throughout the winter, throughout the fall, throughout the spring, throughout the summer, and it works perfectly fine. It just, you'll get less entries, but it still works. So like, just don't try to fix something that's not broken.
Yeah.
Basically. All right, perfect. So do you guys have any other questions? Something else we should cover today?
No, I think we covered everything. I am going to be practicing the strategy first, and the demo, and see how I play out. And yes, no, I'm good now.
Yeah, definitely. Yeah, you guys can go ahead and practice, and then if you guys have more questions later, we can always set up another session. Because I'm sure you guys will run into stuff, or if you guys just have a quick question, you guys can always just send me a message, send me a screenshot of your chart, and then I could confirm something or explain something to you guys. I mean, I'm always here to help you guys out. I just want to make sure that you guys, are successful, because you guys have seen, there's a lot of people who've been killing it every single day, and it's possible. It's like really possible, as long as you're consistent and you don't overstep your trading plan. Just stick to your trading plan and be consistent. Always be humble with your trades, because what comes fast can go fast, could go twice as fast. And it's just you just sticking to your plan. That's really what it is. So what I recommend is probably, if you guys have a trading plan, maybe put like a post-it somewhere. That's what I always tell people. If you have a checklist or whatever that you look at, just put it somewhere so that you guys have something to remind you whenever you decide to take a trade. Because I think a lot of people, sometimes they get too overly confident, and they end up forgetting what the whole plan was to begin with, and then they end up making a bigger mistake than it could have been.
Oh yes.
That's what happened to me this morning, because I had traded and I had made my money, and then when you called, well, the other US 30, I said I wasn't gonna do any more trading, and the next thing you know, I done jumped in, and I was like, oh, it's going sideways. I'm like 400 down. I'm like, no, get out. So, but that's my fault for not sticking to my plan, and that's what happened. Every time I have a plan, I always go against it. So you're right. I'm gonna put a plan up, and I'm gonna stick with it. So.
Yeah, no, definitely. You know, it's you just gotta keep that constant reminder. Keep that constant reminder, and you know, whenever you feel like you're being greedy, don't take the trade. I think that's the main thing I always got to remind people too. If you don't feel confident about something and you enter a trade and you feel nervous about it, just exit the trade. Because if it's going to eat at you, and then when it hits your stop loss, you're going to be so upset that you didn't just close it out earlier than letting it bleed you out.
Yeah, you're right. Well, thank you so much for schedule. And if we do have any.
Yeah, we can barely hear you, Karen. Sorry.
Oh, can you? Oh, you know what? The phone was by me. Can you hear me now?
A little bit. Mike's still kind of messy, but we could kind of hear you a little better.
She was basically just trying to say she was trying to thank you for taking this call with us.
Oh yeah, no, definitely. Yeah. Glad I could help you guys. You know, hopefully I cleared up as much as I could. But yeah, definitely. If you guys have any other questions, always feel free to reach out. I'm here to help you guys, and I'm excited. I'm excited to see you pass your FTMO, because it's a good feeling. Like once you get funded and you get that first payout, you're like, man, this is worth it. Because at that point it's risk free. You get your refund back for that challenge, and then you're literally trading risk free. That's why I don't care about my trades. Honestly, when I take these US 30 trades, I'm like, you know, this isn't my money, so I'm kind of like, all right, I'll take it, and I know it works. So it's like, when I take it and it hits TP, I'm like, all right, cool. If I take it and it loses, I'm like, all right, that's cool too. You know, it's really, once it's not your money and it's all risk free and it's all profit from there, I think that will definitely help with your confidence, because you're basically trading risk free and you don't have any worries. Because if you blow the account, you're like, all right, well, I'll just do another challenge at that point. But hopefully you don't have to get to that point. You know, make sure to stick to your trading plan, and you know, just stay funded. And then after that, you can get another one, merge those together, and there you go. You know, just keep compounding from there. That's really what it is.
Now, when you get funded, is there a certain amount you can't lose a day, or there's a certain amount you can't lose in general?
It's the same thing. So if you do the 50K, you'll have the same daily loss limit and the same max loss limit. So you just got to stick to your plan and keep doing what you're doing, and just stay consistent. That's really what it is. It's the same thing, except you just don't have a profit target anymore. So if you make $1 at the end of the month, you'll get your 70 cents back. You know, you'll get your 70% payout. But yeah, that's really the main difference. It's just, you just don't have a profit target goal. But you know, at that point you'll be risk free, so it wouldn't really matter to you.
So basically keep the same risk and reward.
Exactly. Yeah. Or you can even increase it. Like, you know, if you start to feel more confident, you can even increase it. And then instead of going for the full moves, you can just pull out earlier, because that's a lot of people do too. Like I see some people, they'll take like some really big positions, but they only go for like a percentage of the trade. Because like if you look at our Forex trades, like it almost always hits TP1, like almost always. So what some people do sometimes is they'll just take it to TP1. Sometimes they'll just increase their lot size, take it to TP1, pull out. They basically made the same profit if they would have hit full TP using a smaller lot size.
Yeah, that's what I do. You know, basically That's why I ride it in 15 pips. Then I take the big lot size, and I usually go about 35, maybe 40 pips, and then I jump out.
Exactly. Yeah. You know, if that works for you, continue doing it. Because in reality, you know, like I always tell people, like, don't force something on you. If there's something that works for you and something that you like to do, just continue doing it as long as it works. That's all that really matters. Because there's no right or wrong way to trade. It just depends on what fits for you. Because not everyone likes to do everything the same way.
Yeah, right. I feel more confident. Be calling my own shots tomorrow.
Definitely. No, 100%. All right, guys. So I think that's it. Any other questions? Are we good?
We're all good over here.
All right, perfect. Sorry, I can barely hear you, Karen. But definitely.
Oh my goodness, I don't know what is wrong with this mic. Well, that's okay. Well, thank you, Shawn.
Yeah, no problem. All right, guys. So yeah, definitely, if you guys have any other questions, reach out. Otherwise, I'll be available in the chat for you guys whenever you guys need any help with anything. But yeah, so I'll see you guys tomorrow in the live session if you guys are there. Otherwise,
you'll be around. Okay.